My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to save you some money. My job is not just to entertain, but to educate, teach, and put everything into context, even the tough stuff. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. How can you have conviction in a market that seems bent on shaking you out at all costs? Sell, sell, sell. Each day it fools you. And sometimes you get intraday fakeouts, like we had this day. Dow finishing down 173 points after a roller coaster session, S&P losing 1.13%, and the Nasdaq tumbling 1.43%. Even as there were moments where this market looked so good that we thought it could explode to the upside. Yeah, that's right. It looked that good. And then after the close, we got a gut punch. One of the ugliest pre-announcements I ever come across in all the years that I am in business. All the ages. A dramatic shortfall and earnings cut. That's way too positive a way to put it. From FedEx, which just at the end of June told us that things were doing pretty good. End of June. Things got bad that fast. Fortunately, we spoke to the new CEO, Raj Subramaniam, and Raj is going to be with us in a few minutes. And you'll see that exclusive interview later in the show. Unfortunately, this was no ordinary pre-announcement. Pretty much every single week since that June meeting where they told you things were going well, things have gotten worse. Yes, every single week. Week after week after week. It started in Asia, where China has had no snapback whatsoever from the worst COVID days. In fact, things may be worse now than ever. It's like China just stopped. Then you go to Europe. And the war in Ukraine has sapped confidence and crushed pocketbooks as prices for heat and electricity are anywhere from 3 to 10 times where they were a year ago. Who can afford that? Who can stay in business in those conditions? And then the one that I thought was most shattering, frankly, we got to the U.S. It's all FedEx. And while our country is definitely the best of the three, FedEx is telling us the story of slowing business while still positive. But business that is going very bad near the end of the last few weeks. E-commerce, yes, it's doing fine, but not as fine as we thought it would be. Now think of that. That's nothing anybody's thinking about. There are many companies that I can slough off as blaming the macro environment for their own problems. Excuse makers. Companies that use the worldwide economy as an alibi. FedEx is not one of them. Say what you want about this company. We know it pioneered much of what we regard as package delivery, and it got there a lot faster than it took competitor UPS. In other words, I believe FedEx when the CEO says the fault is in the stars, not themselves, an appropriation of Shakespeare that actually fits this time. Now, look, I know this isn't the FedEx show, but the fact that things are decelerating around the globe that fast is something that forces you to think that maybe the Fed is further along than it may realize it is in fighting wage inflation. FedEx, you see, is not the canary in the coal mine, for heaven's sake. It's the coal miner in the coal mine, which means if Jay Powell is watching, the Fed chief, I would say we are going to raise rates 0.75%, but then we must wait and see. Wait to see if what FedEx is saying about Asia, if what FedEx is saying about Europe, and what FedEx is now saying about e-commerce and business in this country is about to spread out of control. And if that's the case, why not just say 0.75% and then wait? And by the way, these people want 1%. I hope you're watching. U.S. Hold'em, give us an apology, will you? I mean, how could you be so wrong? Hey, look, I'm admitting I was wrong. I was more positive than this. I didn't think that this was going to be this bad. I actually gave a conference today at 12 o'clock, and I stick by everything I said because we're not buying any of these economic stocks, buying the stocks that do well in the bad economy. But I didn't know that FedEx was going to lower the boom. Now, the reaction you actually can be expected to have is one of panic. If there's truly a slowing everywhere, why would you bother to own a stock? Why bother? Why not just get into that juicy 3.9% two-year Treasury lovey blanket and go home? Which many of you by this point in the show are thinking, why don't I? Okay, all right. Let me give you 3 reasons why not to. First, this is Raj Subramanian's first quarter at the helm. It's his first. Now, look, he's obviously a total straight shooter. And he cut numbers huge and pulled guidance. But it is the first quarter he's been in the chute. And it pays to get the word out quickly. Now, this is not a kitchen sink thing. I mean, he went over this thing, you will hear in the interview, chapter and verse. But I do think that maybe some of the issues are going to be caused by his own company's execution. They could be doing some things wrong. Nothing's perfect. If Carol Tomé, the CEO of UPS, comes out tomorrow and says she has no idea what FedEx is talking about, business is booming everywhere, well, you might feel pretty darn foolish if you sold everything. I don't think that's going to be the case. UPS is going to be down big tomorrow. I don't want you to buy that one betting that UPS is that much better than FedEx. I'm just saying that there are some man-made issues here, too. We can't totally dismiss that. Is it 70% macro, 30% man? I don't know. But let's not say everybody's perfect. Second, fortunately, the weaknesses that Raj described are indeed man-made. China's using bogus science to lock people up to avoid COVID. And this policy is crushing them. It's crushing them. But it is man-made. President Xi could wave a magic wand. And he has it. He has it in his back pocket. All he has to do is bring in Moderna, which is the company that we know is having one of the terrific vaccines, and say, okay, look, please do what you did to United States. Make the vaccine here, though. Make me feel a little better. Make the vaccine here, and make it so that the flu is more dangerous than COVID, which is something, by the way, that Humana said in its analyst meeting. That's right. The flu's hospitalizing more people in our country than COVID. Can you imagine if China just woke up, stopped their bogus Lysenko technology, science that is crushing them, and brought in Moderna, and you sold everything tomorrow because of FedEx? Russia. Putin is the cause of the weakness in Europe, and he's increasingly being isolated. Did you catch anything of some of the news reports about him meeting with President Xi from China? I don't think it looks that well for him. What did Xi basically say? Which is that, yeah, I get it. I mean, that was the equivalent of what he said. I get it. Now, why does China care about Russia? Sure, it gets its cheap oil because of the war, but 25% of what it sells into Europe. And this war is hurting its customers. China is, in the end, a transactional country, and it would pay for higher oil if it meant more business, but it's not going to pay for lower oil if it means less business. Xi knows that Putin's losing the war. He calls it quits, and then FedEx won't matter. Yeah, but can you imagine? Putin stops the war. Xi says it's time to have the vaccine, and you've sold everything. Finally, it is entirely possible that we really are going to get wage inflation under control. When I listened to Raj Subramanian today, you know what I did? I said, wait a second. Maybe we're much further along in the fight against inflation. Maybe those people who are certain about their jobs or busy hopping from job to job should watch this interview coming up in a few minutes, because I think you'd feel a lot less certain. And if you, by the way, have retired and thinking that your nest egg is going to get you through this, maybe you should feel a lot less certain. Maybe you should go back to work. We are still traveling. That's absolutely true. It's the traveling economy. But when you hear that China's falling off a cliff, remember that they make a ton of stuff that's headed here. And it sounds like sales aren't anywhere near as strong as we thought. That was another takeaway I had from this interview. Maybe the bears who insist that the Fed raise and raise and raise and raise don't know what they're talking about. Maybe the Fed is further along than we thought. So what happens now? The whole miserable sell-off has been guided by one darn piece of paper, the two-year Treasury, which offers a safe haven and tremendous competition to stocks. I did want to come out here tonight and talk to you about how you should go buy some Apple, because I've seen the new phone and the watch, and I think they're much better than the analysts think. I wanted to come out and remind you that there's plenty of the stock market that does well when companies like FedEx issues warnings. I wanted to say, look at healthcare, look at oil and gas, look at companies that have great sector growth. Go watch my speech today. Go watch my speech at noon today. It was filled with stocks that do well if FedEx does badly. But instead, let me just say this. Why don't you listen to the CEO? Let's let things sink in. And then let's accept that maybe, just maybe, the Fed will see that it is worth it to do 0.75 and then wait till next year even. It's worth it to see and bet that maybe Russia will get its act together. Or maybe she will call Moderna, say there'd be some reason for hope. Crazy? Crazy? Not as crazy as a market that seems to know one thing, the 2-year. If it goes higher in yield, sell. If it goes lower, buy. Maybe tomorrow finally goes lower. Here's the bottom line. It is jarring to hear what FedEx has to say, and you are going to hear it in just a few minutes, believe me. But the good news, the problems are man-made. They're fixable. The bad news, most of us didn't know until tonight that we had this many problems, and that they are all getting much worse, not better. Let's speak to Sandeep in New York. Sandeep.
Hey there, Jim. How are you doing?
I am doing well. A little jarred. How you doing?
You know, I'm all right. Good. Trying to get through these market these crazy market times. But like with you by our side and trying to help us out, we can't go wrong.
Oh, thank you.
I really appreciate all the work.
Yeah, you're very kind. I'm trying to call it as straight as I can see it. No sugarcoat, no Pollyanna, just trying to help people not lose money, make some money. How can I help you?
All right. I'm an investor in Twilio, and I really love the company. I think the leadership's great. The future looks good. I also like the fact, I also think AI is the future as well. And I can imagine like a smart customer service solution coming from them in the future that leverages that.
Right. Well, but Sandeep, let me just tell you something. Before you get too deep in this, Twilio is not making money. They just fired a lot of people. They're doing their darn best. But until they make money, I do not want to recommend Twilio. I just can't. Now, it is jarring to hear what FedEx has to say, and you are going to hear every bit of it. The good news, all the problems are fixable. The bad news, most of us didn't know we had this many problems, and that they are getting worse. Man, tonight, the search for clarity in the oil patch continues, so I'm checking in with energy expert and Tellurian founder Sharif Suki. Get it, his take. Then, after the bell, we had a tough pre-announcement from FedEx. I'm running through all you need to know with the CEO. And nurses love the scrubs, but is the stock worth loving for your portfolio? I'm checking in on things with the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.